Hello, I'm Carmichael, and I work for Global Accounting Consulting Services in PwC. Welcome to a further episode of our series of short videos in which we present highlights of the new Leases standard. The principle under IFRS 16 is that a lessee has to recognise a right-of-use asset and a lease liability for all lease contracts. However, there are a few recognition exemptions. First of all, the new standard provides an exemption for short-term leases. For short-term leases, a lessee can choose not to recognise a right-of-use asset and a lease liability, but to instead account for the contract in a way similar to current operating leases. This means that lease payments are recognised in profit or loss on a straight-line basis or another systematic basis. It's important to note that the exemption for short-term leases is only available to lessees. Furthermore, the choice is to be made consistently for each class of underlying asset. Short-term leases are defined as leases with a lease term of 12 months or less. The lease term, however, includes periods covered by an extension option if the lessee is reasonably certain to exercise the option. If the contract is for a longer term, but the lessee has an option to early terminate the contract that can be exercised within 12 months, and if it is reasonably certain that the lessee will exercise this option, the contract also meets the definition of a short-term lease. A lease that contains a purchase option, however, cannot be classified as a short-term lease. If later the contract is modified, or if there is a change in the lease term, it should be reassessed where the exemption is applicable. The second important recognition exemption is for leases of low-value assets. If the underlying asset is of low value, a lessee can decide to recognise the lease payments as an expense on a straight-line basis instead of recognising a right-of-use asset and lease liability. Again, the exemption is only available for lessees. However, this time the choice can be made on a lease-by-lease basis. IFRS 16 does not provide a particular threshold that quantifies low value. However, in the basis for conclusions that accompanies the standard, it is explained that the board had in mind assets of a value of $5,000 or less when new. Examples of low value are IT equipment or office furniture. For certain assets, for example assets that are dependent on or highly interrelated with other underlying assets, the exemption is not available. Aside from these recognition exemptions, there are also two measurement exemptions. If a right-of-use asset meets the definition of investment property as defined in the Investment Property Standard, IS 40, and is held to earn rental income, and the lessee has elected the fair value model in the standard, the right-of-use asset shall subsequently be measured at fair value through profit or loss. A right-of-use asset can also be measured at the revalued amount in accordance with the Property, Plant and Equipment Standard, IS 16, if it relates to a class of property, plant and equipment and the lessee applies the revaluation model to all assets in that class. When talking about what in the new standard makes life easier, it's also worth mentioning the portfolio exemption. Although IFRS 16 in general has to be applied to each individual lease, both lessors and lessees can apply the standard to a portfolio of leases with similar characteristics, where the entity reasonably expects that the resulting effect is not materially different from applying the standard on a lease-by-lease basis. Looking at the exemptions and practical expedients the ISB included in the new standard, there does seem to be a good amount of relief to help make the application of the standard easier. It should, however, be noted that these exemptions do come along with new areas of judgment. Thanks for listening. Our range of publications on IFRS 16 leases provides more information on the practical application of the new standard and is available in PwC Inform. If you have additional questions, please reach out to your local PwC contact.